I look at the narrowness of the market going up and the extremeness of it when it comes to headline and news. And then I just recently subscribed to a research report thing called the Crowded Market Report. And the guy who runs it is Jason Shapiro. And if you've read any of the the Market Wizard books, he was in the last one called The Unknown Market Wizards. And he's a futures trader, and he's a contrarian. And so after about a year of just watching him on Twitter and all this, I subscribed to his thing. But it's very interesting how he goes about it. He's looking at, I mean, you're a farmer and you understand that, if you have a crop, farmers typically hedge that out with future contracts just in case it goes the opposite way.
A lot of them don't. It's amazing. The older ones don't know
Really?
how to do it. But my friend, he's really good at it. I'll go over and watch him, and yeah, he knows nothing about stocks, so I help him with stocks. And I'm like, it's the same thing, except we don't have to worry about rain. We just have to worry about some analysts coming out and downgrading your stock, out of the middle of
Yeah.
nowhere.
Yeah. So he trades futures and pretty much anything future related, but he's got this system, and it's the whole it's the large speculators and small speculators versus the commercial hedgers, basically the institute, market makers. Hey, how are you? Good. And anyways, it's very insightful, and his philosophy behind it is he's averaged for the last 10, 12 years, 30% annually. Like he
Well,
doesn't have bad years. He doesn't have a negative year. And it's just this patience and all things. But anyways, I was reading through it yesterday, and it got me to thinking about how it topped out, like for instance, the S&P is, how short people are the S&P, and in particular, large and small speculators. And the inverse relationship of that to the commercial guys. And I'm like, shorts push markets higher. And when shorts start to exit, markets start to collapse. Well, if you look at the S&P, it's pretty much at that max. The Nasdaq is not. It's close. It's got another 25% to go. And then as of last Tuesday, not this past Tuesday, but the previous Tuesday, and then the Dow is like 58% as of last Friday. And it really
now
got me.
when you say that, is that up based on his something he has, or
his
what's that based on?
it's his calculations, and it's
Okay.
basically but basically he says when you go in and you buy calls on, like, say, Nvidia, the market maker, the big institution takes an opposite. It'll hedge it, and they'll hedge it by buying the S&P, or they'll sell puts, or some version of that. And this move we've seen in May in the AI area has been heavily that. So what you're seeing is the commercial guys are short, in a sense, are hedged out against the large speculators and the small speculators. And his point is that small speculators are 95% of the time wrong. And so, and the large speculators, which are the hedge funds, are up in that area. But once you see this peak, you start to see a rotation out of that trade. And it's more extremes. He's trading on the very extreme side of things. But it just got me to thinking about where we are in this whole process of, we haven't had a significant pullback in really, the two big indexes, the S&P and the Nasdaq. And as we've discussed before, previously, the majority of those two indexes have been driven by really 7 stocks. And the question I have is, how much longer can that go? And based on on the research he's putting out there, we're getting really close, which brings me to the black swan trade idea. once we see some sort of news event that would have rallied the market, but doesn't, and that's one of his triggers, is he's looking for a news event that would typically rally the market, and it fizzles out, doesn't do anything. He goes, typically that is where you see the rotation, if it's
So
up or
kind of
down.
like next week, if the Fed raises rates instead of skips or whatever they call it, something like that.
Well, I think everybody's expecting it would be something like that. It would be that, or now there's a lot of talk about pause because of the 500 basis points move they've done in rates since March of last year. We're just starting to see that trickle into the system. And if they pause, that is a big indication of they're concerned. Maybe they've gone too far.
See, I just look at the stock market in general, even though it's, the Magnificent Seven are driving this. I look at the jobs report last Friday and just knowing what the Fed looks at, they're going, we're not stopping anything.
Mm-hmm.
Okay. Mortgage
Yeah.
rates are down, and all we're doing is we're feeding inflation. And I think you're going to see the core inflation go up still. I mean, go look at gas prices and what's going to happen with gas prices now. They're
Yeah.
already up,
They're up 60
I know
cents.
they take that out of core, but crap, I
still
can't go anywhere
expensive.
without gas or food, and that's what they take out of the deal.
Well, it's like my buddy told me today. He goes, it's expensive to eat down here. He goes, he's making like 300 to 400K a year selling mutual funds. And he's like, we went and got ice cream and it was $60 for 4 people. I'm like,
Really?
yeah. Oh yeah.
Those aren't. I go to Dairy Queen.
Yeah. Well, they're, touristing it and the whole bit. But he went to a restaurant and 4 of them, close to $300. And I'm
That's
like,
usually our bar tab.
yeah. I guess the point is it is expensive.
Yeah, and so again, I'm just looking at NVIDIA chart right here, and for the last 7 days, it's been pretty
Nothing.
much stopped at resistance.
Yeah.
And today, it went way over the upper Bollinger limit, and now today it's under the 9. So if it starts closing under the 9, you're going to start seeing it. I've seen the MACD roll over, stochastics rolled over. RSI is still pretty high, in overbought conditions.
Yeah.
So looks like today was a distribution day too, so that would bring it down a tad. But it's not going any higher than resistance. Something's got to break it out of there, and that's been 3, 4, 5, 6, 7, 8, 9 days. So almost 2 weeks.
Yeah. Well, I guess my thinking is if the Fed were to pause next week and you got a rally off that, but it fizzled out within 48 hours, is that the news story that would pivot this market?
From what I hear, they're not using the word pause anymore. They're using the word skip.
Right.
So they wouldn't raise, but they're going to leave it in, and they'll raise the next time. And again, a lot of this comes from the financial media.
Oh, totally.
Hyping all this bullshit up. I've been watching the Fed on this one, and they've been doing what they've been saying they're going to do. Each and every time. And I think we have a good chance of a quarter-point raise, based on what I'm seeing and what I'm hearing.
Yeah. I mean,
what happens if that? What happens if that happens?
Nothing. I think the market goes up.
See, I think the market's been going up mostly because of AI, but partly in trying to get ahead of this Fed pause trade. So I'm in, and I'm going to catch the next ride up.
Yeah. I guess it's where does it go? Like, so if they do pause, is that the news event? Is the Fed the news event that triggers it to go higher or lower? I guess is the question. I'm with you. I mean, I'm hearing a lot of talk about a pause or a skip, but unemployment is not going up, and inflation seems to still be going up. So that is their two number one rules of we got to squash that. I guess it's maybe a question of some point that's going to happen, and when is it most likely to show up in the news? When is it most likely to see unemployment jump, 25, 50 basis points?
Didn't it go up to 3.7, even though there were more people working, which I don't understand, but
Yeah,
well, I think that's the way they calculate it, because if you go out and if I have 3 jobs and you have 4 jobs, that counts as 7,
right,
even though it's only 2 people.
right.
It
Yeah,
does, and that's how they
yeah,
manipulate it.
that's insane. So do you see an opportunity? And this is like one of those out there on the spectrum kind of trades, and what where the market does retrace, um, and what causes it? What's the event that could? What's the different events that could cause such a trade that we could see 20, 30% decline?
That's $100,000 question.
Well, that's what I'm trying to figure out.
Yeah, I wish I knew.